The Essays of Warren Buffett, Lessons for Corporate America is a collection of Warren Buffett's writings. Compiled by Lawrence Cunningham, a researcher and lecturer at Harvard Law School. This book contains valuable lessons from one of the world's most successful investors and provides insight into his philosophy of investing, corporate management, and business strategy. Here are some key lessons from the book. 1. Invest in businesses with lasting value. One of the core tenets of Warren Buffett's investment philosophy is to look for companies with simple, easy-to-understand business models that are likely to sustain a competitive advantage over the long term. Simple business model. Buffett always looks for companies whose operations and future prospects he can clearly understand. Sustainable competitive advantage. He advises investors to choose companies with sustainable competitive advantages, such as strong brands, low costs, and business models that are capable of generating sustainable profits. 2. Focus on prudent financial management. Warren Buffett has always emphasized the importance of prudent financial management and protecting investment capital. Protecting investment capital. One of Buffett's most important principles is to never lose money. He always seeks to protect investment capital from unnecessary losses. Control costs. He advises companies to keep operating costs low and avoid unnecessary expenses, ensuring long-term financial performance. 3. Invest in talented managers. Buffett believes that the management team is the decisive factor in the success of a company. Choose ethical and talented managers. He always prioritizes investing in companies with honest and capable management teams who can lead the company to sustainable development. Trust in management. Buffett believes that if you invest in a company with an excellent management team, you will be able to achieve stable profits in the long term. 4. The importance of maintaining a long-term strategy. Warren Buffett is an advocate of long-term investing, instead of focusing on short-term transactions. Long-term investing. Buffett believes that the buy and hold strategy is the best way to achieve sustainable profits. It is important to find companies that can maintain stable growth for many years. Patience is an important factor in order to take advantage of the development of the business. Investors need to be patient and not get caught up in short-term fluctuations of the market. 5. Look for low-value opportunities. Another important lesson from the book is to look for investment opportunities with low value compared to growth potential. Investing in value stocks. Buffett is famous for his strategy of investing in stocks that are undervalued by the market, with real value far exceeding the current price. Taking calculated risks. He is not afraid of risk, but only accepts risk when there is protection from a margin of safety. This means that investors should only invest in companies that have protection from undervaluation. 6. Investing in industries with stability and growth potential. Buffett advises investors to focus on industries with stability and future growth potential. Industries that are easy to understand and less volatile. He avoids investing in industries with large fluctuations or are difficult to predict, and instead looks for industries with stable growth prospects. Long-term opportunities. He often looks for businesses that have the potential to grow sustainably over many years, instead of chasing short-term trends. 7. The importance of learning from failure. Warren Buffett always emphasizes that learning from failures is very important in investing and business. Learning from mistakes. Despite his outstanding success, Buffett also encountered many failures. However, he always knows how to draw lessons from those mistakes to improve his investment strategy. Not afraid of failure. He believes that failure is not a bad thing if you can learn and not repeat those mistakes. 8. Choose companies that generate strong cash flows. Finally, Buffett advises investors to choose companies that generate strong and stable cash flows. Cash flow is important. Companies with strong cash flows have the ability to grow sustainably, pay dividends, and reinvest in profitable opportunities. Free cash flow. Buffett often looks for companies with abundant free cash flow, which allows them to maintain operations and invest in growth projects without having to rely on debt. Conclusion. Valuable lessons from Warren Buffett. The Essays of Warren Buffett is not only a book about investing, but also a guide to building a successful business. Buffett's principles of investing in businesses with long-term value, managing finances carefully, selecting talented management teams, and maintaining a long-term strategy are valuable lessons for investors and entrepreneurs. These lessons help investors better understand how Buffett achieved success and apply it to their investment strategies.